Hello traders! Welcome back to the channel. It's your boy here, Roy Levine. In the previous video, I introduced you to the Fibonacci retracement tool. We're going to keep that tool on our chart, but this time we're adding a second layer, a second indicator. Now, if you've been trading for a while, you've definitely heard about it. If you're new, no worries, because by the end of this video, you'll know exactly what it is, how it works, and how to use it to spot trends, reversal, and just clean entry points. I'll break it down. I'll break down the basics, show you how to drop it into your chart, and explain how I personally use it in my day-to-day trading. So we're going to have a second layer on top of our Fibonacci retracement, right? And in the next video, I'm going to introduce a third indicator, which would make the whole thing a full strategy. So hope you're ready. Let's dive in. Now, on this video, what I'm going to do is add a second layer on top of the first tool that we already set up, which was the Fibonacci retracement tool. What I did was I placed those levels instead of that Fibonacci tool and took the tool out to allow for a clean chart, but I did mark the important levels from that Fibonacci. So we have a solid support right here at the bottom represented by these two red dotted lines, and we have a strong resistance right on top represented by these two red lines, right? And they're all Fibonacci levels that I extracted from our last video. So now I want to add a second layer of indicator, and in the next video we're going to add a third layer of indicator, a third indicator we're going to introduce that will make this a whole full-on trading strategy, right? With conditions, with triggers, and with a game plan that we're going to attach to it. That's how we're building this up, all right? So the second indicator I want to introduce is the RSI, also known as Relative Strength Index. And I'm going to show you how to integrate it with our Fibonacci levels here to create almost a full-on strategy. We're still going to miss one more indicator, which I'm going to introduce in the next video. But you're still going to get the picture. You're going to get where I'm going with this, all right? So let's pull up the Relative Strength Index RSI. What we need to do is to go to this icon right here with that green plus. There's a drop-down menu. If you go to oscillators, you can find it right here, Relative Strength Index, right here at the top. For me, it's in the top. I can also find it here because I used it not too long ago. So let's pull it up. Now here are these are the parameters window. Everybody has his own unique, way of using the RSI with different numbers and so forth. I'm going to show you what I like to do. I like to set it up on 5. Make it fast. The default is 14. I like to put it on 5. And with levels, you'll have the default showing you 30 and 70. I changed it a little bit. I modified it according to my experience and a lot of trial and error. So what I like to do is to put one line at the 50, at the very center, the very middle of the range. I'll have one line at the 50 level. All right? I make it black so it's strong and visible. And let's go. Let's pull it up. Here it is. So you can see the RSI right here on the bottom of the screen, just below price action, below the chart. And what I want to do here is show you how I use it, right? Because like I said, the Fibonacci levels are going to act as, they're going to give us some predictive value. For example, we know there's tons of support coming in here, 50, 50 and 566. We saw the reaction, price is turning around, and it's on its way up, right? We have higher highs and higher lows. So this is an upside trend. So we're expecting a breakout of these two levels that right now act as resistance, holding price action in its place. But once we have price action starts to crack and break through, starts to cross over these two levels, that's our trigger to get into position. Now, why do we need the RSI for? Well, the RSI is going to give us that confirmation, a second layer of confirmation that's going to improve our probability or our success rate of nailing this bullish conviction, right? So what do we want to know? What do we want to see coming from the RSI as a rule of thumb is price action dipping below the 50% and then turning around and crossing back above that 50%. That will represent a low, right? That represents a low, which means price action's gearing up for a new high from this point forward. Coupled with a breakout of a Fibonacci key level, in this case 642 or 653, there you go. That's our trigger, right? And that trigger is validated by the RSI going below 50 and then crossing back above 50. That is the green light we need to pull the trigger and proceed with a bullish position. But wait, let's not just pull the trigger just yet. Why? Because we're looking at the big picture right now. We're looking at the monthly chart. So we're gauging the underlying trend. What we still need to do is move to the daily chart, because the daily chart is the execution chart. And there we want to have the same conditions being met. We want to have RSI coming just below the 50, crossing back above, and then we'll wait for a daily close above one of these trigger levels to actually strike and establish a buy position. So I'm going to switch the daily chart, show you how it looks like. Check it out. Price sections right now is literally finding the 642 right now potentially as support. So what I need to see here before I actually establish that buy position, I want to have price section breaking above 653 because that's the highest level. So that's our official trigger, right? Once price section secure a close, a daily close, a closing bar on the daily chart, right above 653, that's my trigger. And then I'll wait for the confirmation. If, well, we might even have that by then, but if not, we'll wait for the confirmation coming from the RSI on the daily chart just as well. Here, it just dipped below the 50. So once price action starts to pull back up and cross 653, guess what's going to happen with the RSI? It's going to cross back above the 50, and everything's going to be aligned, and that is the moment of truth, right, where we're going to be pulling the trigger. So yeah, that's pretty much it for this video, guys. Just showed you how a combination of two tools, all right, two indicators, in this case Fibonacci retracement and RSI, can make a full strategy, right? But again, like I said, in the next video we're going to add one more indicator here and complete the strategy, and I'll show you exactly from A to Z how we read the chart, read the indicators, make sure all the conditions are met, and we're going to be pulling the trigger once we get that green light. Hope you enjoyed that video. Like and subscribe, and make sure you don't miss out on the next one. See you then.